Hi guys! So on this channel we talk about personal finance, and I know we've talked about real estate investing before, but today I want to talk about real estate investing for the busy professional. I know fix and flip is not for everybody, but there are ways to invest in real estate where you have minimal amount of effort and quite a bit of return for just putting your money into an apartment deal or investing in some kind of commercial real estate and having a return of almost 2 or 3 times your original investment. Let's talk about it. Okay, before I get into it, I gotta put the disclaimer out there. Any type of investing is a risk, so I would not advise you to invest anything more than you can afford to lose, right? So there's always a possibility of you really multiplying your investment, and there's a possibility that you can lose your investment. So you don't want to be investing in the kids' college funds or things of that nature because you put all your eggs in one basket. So that's just my little disclaimer before I get into it. Real estate is one form of investing. We talk about other types of investing on this channel, stock investing. If you haven't checked out the stock investing for beginners video we did parts 1 and 2. And we talk about various ways of using, perhaps if you have a regular, as they call it, a W-2 job, meaning you work for somebody else and they issue a W-2 every year, how you can use that money to invest in other business ventures. So that's what we're going to talk about today, specifically syndication deals. And for those of you who are new to real estate, syndication deals are buying commercial properties, you know, those big apartment complexes you may see, or even any kind of units that are above 5 is considered commercial real estate. Investing in those type of deals and doing it with other people so that you can buy bigger property and in turn getting a good return on your investment. So I'm going to kind of break down like how much you need to do these kind of deals, who you want to invest with, how long you have to have your money kind of tied up in these kind of deals, and why it may not be for everyone. But there are always tax benefits when it comes to real estate because the IRS favors real estate. So that is one of the reasons what I would say, if you have your portfolio of investments, whether it be for like IRAs, 401ks, real estate, stock exchange, stock brokerage accounts, in your little portfolio, I would suggest you having real estate as one of your type of investments. So let's get right into it. Okay, if you were like me a couple of years ago, well, 3 years ago now, I thought about, when I think about real estate investing, I think about like buying a house, let's say renting it out to somebody, becoming a landlord, kind of managing the house and things of that nature. And that wasn't very appealing to me. I didn't want the headache of actually having to deal with tenants all the time. I found it was busy. I didn't want to have to do a fix or flip, like go through all that construction, managing all those deals, contractors and things of that nature. That wasn't appealing to me. It's still not that appealing, but I've learned a little bit more. I lived through a construction trying to do a fix and flip. That was not fun at all. I think I have trauma from that. But I found another way that I thought real estate investing might be for me, and that is through syndication deals. And what it is investing with other people in a bigger project. And so you are a limited partner. A general partner is the syndicator, and they're called sponsors for the deal. And they go find, let's say, a property. Probably the apartment complex close to where you may live may have this kind of deal set up where they find a complex. Let's say it's for $2 million to buy. The sponsors go and raise money with other people. They say, hey, do you want to invest in this deal? You get a certain return back from investing in the deal, and you can be one of those people. So it's very minimal effort on your part. So if you're a busy professional, a lot of people who have, you know, it doesn't have to just be for high earners too. So it can be for people who just have money set aside for investing that want to do something like that. You become a limited partner in a bigger deal. And so you have, it's a big, think of it as a pie chart. You have a little sliver of that pie by investing in this bigger deal. And so you're a part owner in these apartment complexes. And so I would say when we first started the journey, I got to know some of these people who are already in the game. They're called sponsors. And perhaps I'll be a sponsor in the future. I'll look back on this video and say, I remember when I talked about sponsors. But I went to many meetups to try to familiarize myself, to network. And I think I talked to you before about attending meetups. And it's an app, and they have them in different areas. And you get to know people. And I went quite a few times so I could get to know people, talk to them on the phone afterwards. I did a follow-up email, things of that nature, and started to build my network. I know there's also a Facebook group that I'm also a part of called the African American Multifamily Network. And it's basically a whole network of people who are into doing commercial deals. And that's another way to network, because when you do a deal with people, especially in real estate, it's kind of like a relationship. You want to make sure you know who you're investing with, so that if things go sour, you know to come. Like, this will be very awkward at Thanksgiving if you lose my money, or like, not on purpose, but you want to make sure it's not somebody who's taking advantage of you. This is not like a scam kind of deal. You want to know who you're going to spend $30,000 with, right? So I would say that would be the first step if you're trying to get into that, because it's basically, like I said, it's minimal effort. Here, I give you my money, you invested in a deal, you give me back 2 or 3 times what I gave you back. Sounds perfect for someone who has a regular job and perhaps may not have the time to go scouting and looking for deals themselves, but can basically tag along with somebody else's deal. So that's basically the entry level point. Finding a sponsor that you trust, and you find them by actually participating in meetups, or like I said, I'll put some information in the description box too for those of you who want to figure out, how do I find these kind of people to do these kind of deals? So before I get into details for more, I want you to comment below. Let me know if you already have been a limited partner in a deal. Like, what kind of deals have you already kind of ventured into? Was it a bigger deal? How many units was it? Or let me know if you've done fix and flip, and whether you're trying to get into the syndication side of it now. I kind of want to know, because I'm a newer person to this kind of industry, but I like the idea of syndications. And so I think that this is something where I find it valuable, and I want to kind of see what you guys stand on it as well. Okay, a lot of people always ask me, like, well, how much does it take to get into these kind of deals? Like, how much money do I have to come up with, and how long is my money going to be tied up? Both of those are good questions, right? I would say the deal buy-ins vary depending on what kind of deals you're interested in. So they may be like a smaller complex, they maybe like 16 units. That's going to be maybe $1.6 million, for example, right? That doesn't require as much to raise money for that versus a deal that's like 5.6 million, right? The sponsors, let's say the people who want to invest in this particular deal, if the sponsors get them to invest more money, they have to get less people together. So they may have a buy-in of $100,000, right? That may not be a deal for you, but there are other deals that have smaller buy-ins, perhaps $30,000, and you can invest in those kind of deals. And let's say you want to do it with someone else. Let's say you don't have the whole $30,000, but you want to say, hey, a friend of mine has 15, I have 15. I would suggest you guys form a limited partnership, an LLC, and create that partnership and use that partnership name to invest in that deal together. So that way you're benefiting, both of you are benefiting from this deal, 15-15, and you can participate in this higher buy-in than what one of you would have individually. So that is another way of doing it. So the buy-ins vary. I would say they're not that low though, because if you think about it, it has to be worth the sponsors and yours time. If it's a buy-in of $5,000, yes, you could double your money and make $5,000 more, but that's not really a great return as far as like the bigger picture. So I would say like the higher buy-ins are going to be probably double digits, higher double digits, but something that you may be able to do with someone else if you guys kind of formed a partnership together. So keep that in mind. As far as the whole time, like how long is my money going to be held up? I know a lot of people like the advantages of stock investing because it's kind of liquid to the point where you can sell the stocks and then get your money, right? Depending on if you have you're at a good price when you want to sell it, you pretty much can get your money back within 24, 48 hours. It's very liquid if you need to have access to that money quickly. Unlike stock investing, if you're investing in these kind of deals, they usually have a minimum buy-in time that you have to keep your money tied up into the deal. They're usually doing some renovations. They're paying people like construction companies, other things to do kind of rehabilitation of the property, which will in turn raise the value of the property. And when they sell it, that's how you get more of your money back. So they need your money to stay in the deal for a certain amount of time. And they vary. It can vary from, let's say, 5 to 7 years. I've seen longer ones that have been like 10 years to keep your money tied up in it. And I would say that don't use any money that you feel like you would need to have liquidated during that period of time, because they're not going to let you out that deal. If they make an exception for you, it's probably going to come with a penalty for letting you pull your money out earlier than everybody else. So just keep in mind, like, my money's going to sit there and grow. It's growing faster than it would ever grow in a savings account. So if you are keeping your money in a savings account and not even touching it for those same amount of time, you're going to make way more money having it in this real estate deal than leaving it in that savings account. So I wouldn't be too caught up in that. Granted, you wouldn't be able to do other deals because your money is in there, but hopefully you picked a deal that will have a good return on your investment. So I would say keep that in mind when you're considering which one you want to invest in. As I mentioned before, real estate is one of those kind of investment deals that the IRS values in regards to giving you tax breaks, right? They give you can write off a lot of things for depreciation of the property, not the land, but the property itself. You can depreciate it and then write it off on your taxes, which means that it's going to reduce the amount of taxes you owe. That's always favorable because unlike in the stock market, you make a lot of money from the stock market. You pay it based off of whatever your income is that year. And it's usually a higher bracket, right? If you make more money. Whereas in real estate, it's a different bracket. You have a lower tax liability. So the whole idea is when you make money, especially investment wise, you want to keep the more of your money, right? You don't want to have to make money and then give away most of it that you made because it's in a higher tax bracket. So real estate is one of those kind of, I guess, safe harbors to, protect more of your money. There's a lot of ways you can write off different kind of deals in your personal taxes. So I would say that would be one of the benefits. As a passive investor, there are also ways, even though you're not the actual person that's signing on the paper for the deal, but you're benefiting from it because you're the limited partner. You're not, your name or your credit is not being pulled. So that's another big advantage, right? You can do other deals yourself personally because your credit is not tied up in this deal, only your money. But you also benefit from the tax benefits from it because the sponsor has the tax benefits trickle down to the limited partners. So when you're filing your taxes next year, the sponsors give you a K-1, which tells you what the investment is and tells you what the write-off is. And there's always tax benefits for you as a limited partner in a bigger deal. So I would say that's another plus of why I like syndication so much. There's so many reasons to like it, but that's one of the bigger reasons, the tax benefits. I keep more of the money that I make off of it. So let's say I invested $30,000 and it's a equity multiplier deal where it's like 3 times the amount that I put in. So 30,000 times 3 is 90,000. So when you subtract the original investment, you would make $60,000 off the deal. That's a pretty decent, and depending on the whole time, it's probably not going to be a year, but whole time for, let's say it's 5 years, right? You made $60,000 in 5 years off of a $30,000 investment. Tell me where else you're going to find that kind of investment that's almost guaranteed. Real estate, unless the market really tanks, commercial real estate is kind of in its own space. It's not the same as residential as far as how they value things. So I would say that it's a safer investment than most, and you're getting quite a big return. So you get to keep more of that $60,000 profit you made than if you have made $60,000, let's say, in the stock market, which is going to put you perhaps in a higher tax bracket. So these are some of the reasons why I like it. I'm going to put some resources in the description box below so that if you're interested in going this route, I found it beneficial. If you're a busy professional and you're trying to find ways to kind of expand and increase your net worth, this is one good way of doing it.